While the world is looking west, I am looking east. Of course, in many circles, the gravity of the United States and its Western partners is realistically not overstated, but it often is something that people look at too much. And of course, with here at the Traveling Reports, which hello and welcome back to the Traveling Reports, we look at specific markers that are usable. And for me, what is a usable marker is where the money was flowing a few years ago and is now being taken out and the assets are being depressed. While assets are depressed, this is where you buy. Where assets are booming and becoming huge, as Trump would say, huge, the places where you're looking are already too late to invest into because the friction of what is happening in the economy is too great. And you could be catching a falling knife. Of course, you could be in a developing market as well. However, and especially a depressed developing market. But catching a falling knife when it's already fallen a little bit is a lot better than catching a falling knife that just peaked. Because that peak means that you are invariably tied to whatever the total loss is. And often people do not look at liquidity, people do not look at how these markets are truly working, because the leverage in developing markets and the leverage in markets that are illiquid are different to those that you are looking into in the West, where liquidity is constant. And for instance, rental yields in Southeast Asia, for example in Malaysia, are insane, realistically. You can look at real estate investment trust stocks, and they're paying 25% dividends. Why? Because they can sustainably get 30 to 35% returns on investment on real estate. How do they get 35% returns? Well, it's not fixing and flipping. It's rental yield. And so for a lot of these markets, what you need to worry about, what you need to look at is how they operate, what the operations look like, how operations differ. And you need to do this on both a macro scale and a micro scale. So what do I mean when I say macro? I mean big. So the whole country. How does that function? What are the economic drivers? And then on the micro scale, if you're creating a business, for instance, how is that business going to interact with the macro scale? Well, the macro invariably creates a unique position within the whole line of events, because, for instance, if you're looking at foreign exchange rates, which you should if you are investing in a country that does not use the US dollar, that does not use the euro, that does not use the Great British pound, because the currency is, of course, not tied to the same metrics that a US dollar, euro, yen, Great British pound would be. And it's with this that you gain more risk, but you also gain more reward. And of course, do your own research on developing markets. If you are interested in my research or my methodology, of course you can contact me down below on the calendar. Or if you want to learn more about developing markets, how things work in the world, feel free to subscribe as well. However, when you truly look into all of these things, all of these ideas, all of the convergence of these ideas, what you get is you understand the market, first of all, which is very important in and of itself. You should not be investing in a market you don't understand, but you understand the micro scale. And so you understand the business within the context of the macro economy. And realistically, any economics student would tell you, oh, this makes sense. This is normal. This is basic economics. And it is basic economics. However, this has led me to make the conclusion that while everyone looks west and dollars are actually piling back into the US, foreign direct investment in the US is up. The banking system is flush with cash in the US. People are realistically saving more in the US economy, and treasury rates are actually up. What people were quantifying as a crash is turning into capital piling in. And if you look at the stock market, it is completely out of whack. If you look at crypto, completely out of whack. If you look at any asset right now in the West, extremely high in total valuation. But let's look at the East. Places like Cambodia, like Philippines, like Hong Kong, Singapore, plenty of places within Southeast Asia. Additionally, Uzbekistan, Tajikistan, Kyrgyzstan. These are all places I'm looking into. And I don't mind giving you my playbook because realistically, the thing that I am not holding from you is my knowledge. What I am giving to you is my knowledge, and I will continue to do so. And so the reason why is not because I believe that some people won't, use this information. I don't really care if anyone uses this information. I don't care if anyone does use it. What I care about is people making more informed decisions, and additionally, for those that need speed, who need someone who does understand these things to help them. And of course, I do consulting in and of itself. However, that's realistically for a different audience than someone who would watch a video like this. And I play to both places, right? I want to inform people who want to do this on their own. It doesn't really create any competition for me. In fact, it reinforces the investments I make, which, of course, do your own details. Don't just invest where I'm investing. However, this is something that I think that realistically more people should be looking east, and I'm here to give you the insights into why you should look east. That said, of course, if you liked this video, feel free to like it. If you're looking for one-on-one consultations on where to invest, how to invest, feel free to reach out below on the Calendly link down below. If you want to join me in this journey of internationalization and globalization, feel free to subscribe. If you really like this video, feel free to share it. This has been the Traveling Report, signing off.